A lot of people are getting really nervous about the markets, but what I've tried to do over the past couple of videos is to show you can make a tremendous amount of money going long at spot in turbulent market conditions. If you haven't seen those videos yet, please look at Profit Skills and How to Trade Dips. You'll find them very, very educational. Looking at the news from today, US inflation has accelerated on a short-term basis, and we can see just here that's exactly what it's done on a 3-month annualized change percentage basis. The markets are quite negative at the moment, but we are coming into earnings season. With the Magnificent Seven earnings arriving, with stock market at a critical time, over $930 billion has been lost since the Nasdaq 100 peaked. But there is some good news. Profit growth from the Big Seven, or the Magnificent Seven, is forecasted to increase. We can see total earnings are positive. That's better than if they were negative. Nvidia, Amazon, and Meta are the standouts for the net income growth in the first quarter. Tesla, unfortunately, not so much. Apple, not so much either. Over the past week or so, we've seen the S&P 500 futures come down, the Nasdaq come down, the Russell 2000, the Dow. This has influenced stock markets all around the world, and it's important to understand, even if you're trading in, for example, Australia, what the S&P 500 and the Nasdaq does will impact Australia. Please do not forget this correlation. The other thing to take notice of is this blue line. That blue line is Bitcoin. As the stock markets have been retracing, Bitcoin has also been retracing. We're starting to see a little bit of an uptick in Bitcoin's price at the current time, and we would expect a lot of hype around the halving. But just please don't get caught in narratives. Get caught in price action, the real price action. As the markets have been coming down, there's been increased demand for silver and for gold, and we can see silver hitting a 3-year high. Currently, China has been pushing the price of gold up. You can see that by China taking the title of the world's biggest buyer of gold. That was in 2023, and it's only become greater just recently. And this has a lot to do with China's property market imploding on itself. When looking at the top assets by market capitalization, gold is number 1 at 16.161 trillion. Silver is number 8. Bitcoin is number 9. A lot of people, namely the banks, say that you should not consider Bitcoin and that pesky crypto. Because, after all, it's a leakage out of the banking system. The truth is, the 9th largest asset class on the planet, deserves your attention. All markets are intercorrelated and interconnected. What happens with rates really matters around the world. The bond market influences the stock market, and the ECB's Villeroy says oil uncertainty won't stop a June rate cut. If the US doesn't cut rates in June, and that's the anticipation, that will give strength to the US dollar. Just bear in mind how all these things work together. That will push the US 2-year, the US 10-year up. Unfortunately, the world has never been in peace. We've always had wars, and wars are just normal. The situation with Israel and Iran seems to be cooling down, but it's a little early to tell what's going to happen next. Just bear that in mind. Keep it on your radar. The reason that I shared these two videos, Profit Skills and How to Trade Dips, is that a lot of people, when they see negative price action, they just run screaming from the markets. Negative price action is not a problem if you're prepared for it and you know how to profit by it. We can see that when we look at the inverted VIX as opposed a comparison to Bitcoin and the S&P 500, the VIX, inverted VIX, is currently just spiking downwards. This would anticipate negative price momentum inside the markets, but we have to figure out, are we close to a rebound yet? Just always remember that even though something comes down, it's not just going down, it's going down and then up, down and then up. These retracements can make you an absolute fortune going long at spot, and that's what those videos show you. The market narrative is one of fear, absolutely unequivocally so. A lot of people are expecting more and more negative price momentum across the entire world. As soon as you see these narratives playing out, you know that it's time for a rebound to the opposite direction. Because price is always moving in a wave, just keep your eyes on the intercorrelations and interconnections between the different charts. It's wildly important if you understand why different charts are moving in the directions that they're moving in. It is an absolute game changer. If you're doing your cheat sheet, please keep it up. It's important to follow the futures to understand where things could be going, and we saw in the last trading session for Nvidia it came down 10%, Amazon 2.56% down, Meta 4.13%, but we saw oil and gas doing quite well. Inside the stock market, all sectors were down 0.88%. Information technology, as you can see, didn't do very well. In fact, it was the worst sector. Not surprisingly, as the information technology sector has been the best performing sector, the entire stock market is experiencing fear. When the markets experience fear, they just anticipate that the markets are going to come down forever and never retrace. You can see this is crazy because the markets always retrace. Everybody talks about, oh, I want a dollar cost average in. But when the prices go negative, people just sell up and run away. And they're drawn back in when prices start to stabilize, only to find they get cut again as the markets do a down wave. Always remember that the markets are always moving up, coming down, moving up, coming down. This is just the way it goes. Just time these down waves because they're the most profitable waves that you can experience. Even if you've watched these two videos, please make sure that you watch them again. Profit skills and how to trade dips. It's going to become pretty vital because the markets are going to be turbulent in the next few months. It's also really good to keep your eye on the Forex pairs. What you can see is that when you look at the euro dollar as opposed to Bitcoin and the Aussie dollar and the Kiwi dollar and the Great British Pound versus the dollar or the cable, you can see they're very closely related to Bitcoin's price action. You can see that blue line there. That can give you a bit of an insight into where things could be going. For example, if the fiber turns around and goes positive, where do you think Bitcoin is going? What about the Aussie dollar? What about the Kiwi? What about the cable? And if the DXY strengthens up, where do you think Bitcoin is going? A lot of people stop their analysis there and don't look more deeply into the charts. When we look at the DXY, we can see at this 106.45 level, there's a lot of structural resistance. As too at the 106.25 level, we're currently underneath that structural resistance. If we get above there and start to push ourselves up, that's going to be negative for the stock market and for Bitcoin, for crypto. And what about if we start to break down to this lower structural support level at 105.61? That's going to be very favorable to global markets. When you understand structural resistance and structural support, you'll understand that when we come up into very steep structural resistance levels, here we're looking at the US 10-year, if we strike structure and we can't get through it, we're going to be pushed downwards until we can find enough safety nets to reflect the price back. Always understand that structural levels are always gravitational. That is, price goes back to them. In terms of the Fed's actions with the federal funds rate, we can see that the probability of an ease is 3.8%. It was 1 day ago 5.4%. It's come down. This indicates that yields and the DXY have positive price momentum, so just be aware of that. Looking into the crypto market at the current time, we can see Bitcoin is up slightly. ETH and BNB not doing too badly, but it's basically a bit of a flat line at the current time. Total crypto market cap has approximately come down 1.41%. We can see across the past 24 hours, we've had Bitcoin just coming up marginally. What's been hit the most in the past 30 days? We can see Solana has been retracing quite significantly, as well as XRP. Ethereum is also quite subject to retracement in the past 30 days. But you will also find when things retrace, they can recover very quickly. So just bear that in mind. Let's look to the greatest 24-hour percent gainers. The meme coins are absolutely making a comeback. When we look at the 24-hour percent gainers, what do we see? Meme coin, and meme coin. Also some Bitcoin related projects. If you're ever interested in seeing what a specific project is, go to CoinMarketCap and just click on it. Let's have a look at Core. What the heck is Core? Let's find out together. I'll show you how to research a specific crypto. What you can do here is it's a really good idea to look at markets and to see where things are traded. You can see as far as centralized exchanges, it's not on Binance. Now, what does this actually mean? If it's on Binance, it's probably listed and it's probably a fairly stable coin. We can see that's not the case at the current time. Let's have a look at the chart. What's the chart doing? Just pop it on log, go to a month and get a bit of an understanding as to what it's doing. It's getting a few crossovers. It's looking quite good from a price perspective, just on the short-term basis. Another good thing to do is just to go up to the About section. Let's just have a look at that. We can see the core is built as an L1 blockchain, running Ethereum smart contracts or dApps. Inside the masterclass, I give a lot of understanding how to look through a specific project. There's a lot of things that you need to look at. Okay, just gives you a bit of an understanding. And if we come down here, we can actually go down and see the self-reported tags. Self-reporting is not a really good thing. You would want CoinMarketCap to have done its analysis. So this is pretty new. And then you can go to the website and look at the white paper as well. You can see there's a bit of a difference in the explanation as to what core is. Back on CoinMarketCap, it was an L1 based on Ethereum. Now it's a L1 based on Bitcoin. Pretty interesting narrative. Turning towards the greatest losers in the past 24 hours, we can see CKB, Wormhole, Injective, Audi, Pendle, The Graph, Sui, and Maker. It's not a bad idea to look at total Bitcoin spot ETF net inflows. We can see the net inflows are starting to increase after being negative for quite some time. That may see increasing money coming back in to the crypto space. And we know the Bitcoin halving has already done. Happy halving, everyone. Across the weekend, things were very interesting, but we saw over the past 24 hours, nearly $105 million in liquidations occur. The majority, pretty much nearly 2-to-1, were long liquidations versus short liquidations, and 45,000 positions were decimated. The joys of leverage trading. If we look across the past 24 hours, we can see the majority of liquidations were in fact long. We had some short liquidations here. And you can remember that Bonk was one and Core was another one of those particular cryptos that went up. Just keep your eye on short liquidations because they push the price up. Long liquidations push it down. Inside the crypto market, we're a bunch of very enthusiastic people, and we can see that we have far less fear than the stock market. In fact, we're at 72. We're being greedy because of that greedy halving. Who cares about wars? Who cares about correlation between different markets and different charts? Hey, let's go all in and more on a story. Why not? It's what the institutions want for us. We can see that Bitcoin and gold have been coming down together. They're like best friends. Peter Schiff and Michael Saylor. One of the things that we always notice, as Bitcoin goes, so too do the alts. So be very careful. If Bitcoin is coming down, guess what is happening to your beloved alts? They're coming down as well. Is this a bad thing? No, it's not bad at all. Sometimes we need to flush the longs out of the market because they get too optimistic. And don't forget, it goes the other way. When the market gets too pessimistic, the shorts get flushed out of the market as well. That's why price is always moving in a wave. Across the weekend, when we look at Bitcoin, this 65,188 level was a bit of a problem for Bitcoin. This structural resistance level, Bitcoin came up after this massive liquidation of shorts. And what happened? It hit 65,188, couldn't get above, so therefore it's going to the lower structural levels below. If it does a crossover, we could see that it comes back to structural resistance, but if it can't get over, it's going back below. It's still too early to see what Bitcoin is doing, and we have to contextualize this a little bit. I need to move this chart down so you can see what is up there. Okay, let's do that. Now, what are we looking at? Whoa, ay caramba. We have some really stiff resistance. Now, this is structural resistance built with the world's most powerful smart money buy and sell level detection system. We can see that around that 66,800 area, it's going to get really tough for Bitcoin to get through that. So this is what you must bear in mind. A lot of people think that there's just one level of structural resistance and one level of structural support. This is not the case and never has been. Also, in these videos, Profit Skills and How to Trade Dips, I go through how to read structural support and resistance levels. It's really important skill for you. Please let me know in the comments, where do you think we're headed with Bitcoin? Do you think we'll come up and challenge this 66,800 level and bypass it? Or do you think we're coming down to lower levels, such as the 63,300? Let's have a look at Solana's key levels from a structural perspective. We can see this 146 level has been obeyed many times, and also this 160 level is an area to keep your eye on. 146 is important. If we come down here and just retest, that puts the 160 area in our vision. But if we come down, underside retest and go down, that opens up the 132. It's very important to know where the true structural support and resistance levels are. A lot of people just say, oh, there's a level here and there's a level here. That does nothing because it doesn't help us. You need to look through the most statistically significant methodology that you can get your hands on. And that is the CTKS method. Another thing that people tend to get really confused on, they think structural levels are like brick walls. They're not. They're like trampolines or safety nets. For example, if you go to the circus and a high wire trapeze artist falls and there are safety nets below, we would hope there are, they're not going to just hit it and just stop and bounce up. It's going to absorb that energy and then push it up. This is how price works as well. They also act gravitationally. So if they can't get above, they are going below. Just think about gravity. Gravity is a thing that you can't see. Structural levels are a thing that cannot be seen without a scientific methodology. And we do not use recent indicative price, which will RIP your money. You're inside financial markets, which means you're very intelligent. Only the most intelligent people go anywhere near financial markets because they're so chaotic. But we need to understand that financial markets are always moving in waves. Price will not simply go straight down and it will not simply go straight up. If it's going up, it's doing something like this. And if it's going down, it's not doing that. It's doing something like this. That's why you need to have your risk management. And your risk management is really very mentally focused. You need to have 3 opposing strategies. For example, if you were investing or trading in Bitcoin, what if Bitcoin goes down? Would you buy more? What if it just flatlines? Would you get bored and just take on higher risk? Or what if it goes up? Would you FOMO? And if you don't know the structural levels on what you're putting money into and you don't know the intercorrelation and interconnection between charts, you're just gambling. If you're gambling, guess what? The house will win. This is why knowledge is critically important. Knowledge is important, but mindset equally so. If we're not positive about the markets, if we don't have inner and outer peace, you will find that you'll make losses because your thoughts will be scattered. If you're just distracted by other things and you're not peaceful, please do not trade. If you take losses personally, you're not being kind to yourself and you're not understanding how the markets work. You must respect the market. The market always does what is right by the market. It doesn't listen to the news. A lot of people think that the news moves markets. This is a newbie mistake. The news has an impact, of course, but smart money has already made its money before the news has ever hit the stand. If you buy into narratives, you're likely to get really significant losses. That's why being kind to yourself is very important. You just want to focus instead on learning. Be humble and be patient, and respect the markets. This is the key with all things. The markets are the truth. What price action actually does is the truth. A lot of people say, oh no, that shouldn't happen. The price should go down. Well, whatever happens is the truth. The price chart is the truth. Don't get caught in a story. Be independent and always be kind to yourself and be kind to others. Just focus on learning. Life is not about what you get. It's about who you become. Keeping your mindset really positive is very important. Doing daily positive affirmations for abundance, financial success, and happiness is critical. Don't just focus on money. Money is just a means to an end, quite seriously. And a lot of people say, but Ken, I don't have any money. I need money. The way that you get money is to become the person who attracts money to you. How do you do that? You must know that the universe wants you to succeed. If you have a mindset where you say, oh, I always fail at everything that I do, I just can't get things right, you will be correct. That's the experience that you're creating for yourself. Nobody else is doing it to you. You are doing it to yourself. But Ken, that's so harsh. Shouldn't you just give me a hug and tell me everything is going to be okay? No, not inside financial markets. If you have a negative a negative attitude, you will find that you just set yourself up for failure. Know that the markets want you to succeed. All you need is knowledge. A lot of people walk around really sour and angry. They're always trying to find fault in everything else because they find so much fault inside themselves. Every day you show kindness, integrity, and gratitude. That's setting you up to reap the rewards from life. If you're not kind, if you don't have integrity and you don't have gratitude, you will not be happy if you don't have gratitude. If you don't have integrity, you will not keep whatever you get. And you don't have kindness, the world will punish you. I know we're taught by mainstream media to be unkind, to compete and just obliterate other people. But that's a lot of rubbish. Kindness, integrity, and gratitude are 3 superpowers. Always know that if the market hammered you yesterday, well, today is a completely different day. Just dust yourself off and get back in the ring. Yesterday has passed. Don't carry it around with you. It's just not worth it. And always understand, it doesn't matter what people around you have told you, you are worthy. A lot of people want to go really, really fast. They end up going really, really slow. You need to invert that rule. Go slow to go fast. It's the thing that will work for you. Also, a lot of people go really, really large. They go fast and they go large, and then they get wiped out. Do the exact opposite. Start small and scale. And always remember, buying on red is a superpower, and selling on green, if you're trading, is a superpower as well. And if you're going through a life pullback, please know that those life pullbacks will give you the strength for the next life rally. You're getting rediverted, not punished. I believe that the most important thing inside our creed is to understand that you must be dedicated and committed, and this is the key. You either win or learn, and please never blame. Only you has control over what you do. If you buy, it is you buying. If you sell, it is you selling. We have to be mature inside financial markets. The market will not come up to you and say, oh, you had a loss. I'm really sorry for that. Here's some profit. It doesn't happen. Instead, focus on your knowledge and you will find you're either winning or learning. If you're learning, just create market rules. Those market rules that you violate create losses. The market rules that you obey create wins. It is literally that easy. And always just remember, solve your problems with positive excellence. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now. And to all those people who said awesome in the last video, you are awesome. If you've made it all this way, you're just incredible. Just pop something in the comments about dedication and I'll know you made it here. Wishing you all the abundant success and happiness this beautiful life has to offer, and we'll catch you in the next video. Bye for now.